Welcome to another episode of the Will Frederick Podcast, where we talk about real estate, wealth building, money, and life. And today I'm really excited because we have a very special guest. I have Richard LaNasa with Core Lending. He's been in the lending business for literally decades. And a fun fact is that when I first got interested in real estate, I became a lender, and I worked for Richard for a little time. I realized that wasn't really my cup of tea, but so Richard and I go way back. Thank you to our sponsor, real estate tax pro Bob Norton with Norton Accounting Services. Bob's goal is to help his clients become financially free using real estate. And let me tell you from personal experience, he really does. He focuses on real estate investors with clients in 48 states. He's been a resource to myself and many other investors. So welcome, Richard.
Yeah, thank you.
How you doing today?
Appreciate you having me. Doing great.
Good.
Yeah.
So tell us a little bit about your history and just a little snippet. Tell us how you got to where you are today, and tell us a little bit about Core Lending.
Okay. No, great. I been in the industry, like you said, right at 30 years now. So I feel like I've become a seasoned professional.
Yeah.
I've been through a lot of bumps in the road, but no, we opened Core Lending about coming up on 2 years. Mm-hmm. Of course, I owned NOLA Lending before that, and sold that several years ago. Didn't want to get out of the business, so we're back at it. We've done things a little bit different. We've done a lot of outsourcing to keep our expenses down, which has really been key in this environment. Obviously, it's been a challenge since COVID, in many ways. So I think we built it right. We're able to still provide the exceptional service. Everything's in house, underwriting, closing, all that, but really cut down on a lot of our administrative costs.
Mm-hmm. That's awesome. Well, I love, one of my core values is wisdom, and that's seeking like wisdom from people who know a lot more than I do. And I can tell you that Richard knows a whole lot about lending, a lot more than I do about lending. And I wanted to ask you've been through several market cycles. What stands out about today's real estate market specifically, and what advice can you give people, like, after looking at, a 3 decades long journey, saying like, man, if I'd have known this and what I could tell people that I wish they knew, what would you say?
Well, I think one of the things in the environment we're in since COVID is obviously we've got almost 60% of the people in the country mortgages outstanding or below 4%.
Yeah.
And that's hard to overcome, I think. But I think the big misconception, I think if you're in your forever house and you have the 3% rate, great.
Yeah.
But I think it's keeping people that want to move from moving.
It is,
and I think a lot of it is just a lack of understanding of where rates are today. Our rates are ranging anywhere from 5.75 to 6.5, depending on how much you're putting down, what kind of program,
right? Yeah,
et cetera. So a lot of times people, and of course this is something they would consult with their accountant about, but they really don't have much of a tax break left. If you look at a 3% rate, and if they're itemizing on their taxes, there's not much interest left, if any. And they're not even. So you look at maybe if they go out today and they do want to downsize, or their family's grown and they want to upsize, a lot of those people are just holding on because they got that low rate.
That feel good about the rate,
And so if they went back and looked at, hey, if I took 6% and I'm in that 28-30% tax bracket, my effective rate is really only 4%. Because now I've got a rejuvenated tax break. My interest that I'm paying.
Interesting.
So again, I don't want to play CPA, but it's definitely something you could talk to your accountant about.
Yeah.
And really, that's kind of what's holding up the market, especially in the higher price homes. People they're sitting on that 3% and they don't want to move.
Yeah.
I get it.
Yeah.
It's nice to have.
It is nice to have, but I do think sometimes it holds people back. They get that warm and fuzzy about a 3% rate, and it really, why would you not move on with your life? Like, if you really want to do something different than you're doing right now, like want a little bit more space, or maybe you want a smaller house, don't stay in a house just because of a rate.
Right. Yeah. Look, in 6% rates, that's a good, healthy economy.
It's very good.
We're not going to see a 3 or 4% anywhere in the near future unless we just have a catastrophe happen in the country.
Yeah.
Which that could happen. We all know that, but it's very unlikely we're going to see those kind of rates again.
Sure.
So there's no reason to sit on the fence. If you look at the prices, the market's stabilizing. Prices are probably come down a little bit. Pull some equity out, move into the house you want to move in. But it's really not a reason to keep you in a house if you don't want to be there forever.
I agree. Don't put your life on hold for money. Like, essentially, that's a money decision. People put money as such a high thing in life, but as you explained just a minute ago, it's not always a great money decision. It's just a mirage. You just kind of have a warm and fuzzy around that 3% or 4% rate when 6 is really not bad.
No.
You know? So what else have you seen? Like, what else could you tell buyers or even refinance people? Like, what would you say to them about, like, this is, if there's one piece of advice I could give you, what would you say to them?
Well, if you look at it, inventory's building, right? I mean, you know better than me. It's probably 5 to 7 month territory right now.
In Tangible Hope Parish is still probably in the 4s, but in St. Tammany, it's 5 or 6 right now, I believe. Yeah.
So I see more and more houses coming on. Again, you're the expert in that area, but when the inventory's high, that's the time to buy.
Yeah.
You always can refinance. You can do all kinds of things. But if you want to get good value, the more inventory stacking up, there's going to be sellers that are ready to get rid of the house.
Yeah.
There's going to be some that are unreasonable, or they just want to hold off and get a higher price. But right now, if you're looking for a deal, it's probably the time. There's a lot of houses out there.
And that is one thing it's interesting. I've seen, I think it was Warren Buffett that said, it's one of my favorite quotes by him. He said, be greedy when others are scared and scared when others are greedy. So in other words, be countercultural. When you see the whole world like sitting on the sidelines and being worried, that's when you go in.
That's when you buy.
And that's what's happening right now. People are a little bit reticent to buy. They're a little bit nervous. Like, what's going on in the economy? We got tariffs. We got interest rates. All this, insurance right now in our area is a big deal.
Right.
Because of that, I'm seeing deals like people negotiate, sellers who have to sell right now for whatever reason, whatever life situation they're in, they've got to sell. I'm negotiating somebody right now $100,000 less than they bought this house for 2 years ago or 3 years ago, something like that, which is crazy. I'm feeling bad for my client, but they're willing to do it, and a buyer can get a great opportunity for it. Because I'm telling you, it's not a $100,000 less house. Right. It's really not. Right. So I agree with you. I think there's an opportunity right now for buyers.
Look, you're going to buy a house today, and if you're going to keep that thing for 20 years, you're probably going to refinance 4 or 5 times.
Yeah.
During that 20, 30-year period. Yeah. So that's just get the house you want, get the payment where you want.
Right.
And we are seeing insurance rates improve.
I was just talking to my insurer about that.
We've just seen it hit in the last couple of weeks. They've reduced the replacement cost. So that's helping.
Yeah, that's great.
Okay. So we're getting a little bit of interest rate reduction right now. We're about a point lower than we were 3 months ago. We're sitting at a 3-year low on rates. Everybody keeps saying, well, I want to see if they go down a little bit further. When you hit cycles like this, this is the time to get in right now.
Yeah. And that means a lot coming from you, because you've seen some cycles. You have this cadence down. If I'm a 3-year loan officer right now, I don't know anything.
Right.
If I've been in it 30 years, I'm like, well, hey, this feels familiar. So
yeah, and look, I mean, the Fed lowered rates, have a quarter point.
Yeah,
and our rates actually went up a little bit. Our rates are based on inflation.
Right.
That's not going to change. We're going to follow more the 10-year Treasury. But as the Fed spoke a couple days ago, that's the one thing he did say, that mortgage rates over time, it looks like they will be coming down. It won't be in direct correlation with the short-term Fed rates, but they probably will come down a little bit more. But they're not going to go down a point overnight.
Right. Yeah.
I mean, these things will ease down.
Right.
So don't hold up, because you hold up and they will go up.
Well, and also if you hold up, this is one thing I've talked about, because I remember 2 or 3 years ago when we were all falling all over ourselves with buyer offers, and we were one of 5 offers or 6 offers or 10 offers. We had to go over full price to get the house, right? Your home is often your largest investment. Trust the professionals at Fleur de Lis Law and Title for reliable, secure closings. With 10 offices across South Louisiana, Fleur de Lis is your trusted partner to ensure the title to your home and the money you invest are secure. The experienced attorneys and staff at Fleur de Lis can also take care of your real estate planning and succession needs as well. Fleur de Lis Law and Title, Louisiana's leader in reliable, secure closings. And let me tell you, we do the vast majority of our closings with Fleur de Lis. We have had great service. The attorneys there are just fantastic. So we love doing business with them. We highly recommend them. And buyers were miserable, and I was miserable too. Our buyers, I mean, we were just like, it was a really tough time. Now, there were some really good things about it. Sellers loved it, right? We loved getting people in at 3% rates. But what people don't realize is when people tell me now, like, oh, I'm waiting for the rates to go back down again, I don't bother them by saying, which I agree with you, we're never seeing those rates again. I'm not going to convince them that, but I'm saying, listen, so you want to go back to the at a time where you couldn't make a $10,000 less offer and get the seller to pay closing costs. You had to go $10,000 over and pay all your own closing costs. That could be a $25,000 or $30,000 swing. You're going to forego that just because of a rate?
Right.
You're probably going to be a higher payment in the other situation, and you're going to have much more equity in this situation if you just did something now. Right. So, yeah, this is an opportunity.
Yep. It's a buyer's market.
So what's the biggest mistake you see borrowers make? I mean, we're kind of talking about a mistake, but what's another big mistake that you see them make?
I think, just sitting on the sideline, waiting for the right time, just not having an understanding, listen to your real estate agent, they're the experts. Yeah. Let them tell you, and I do think, like you're saying, it's the right time to buy right now.
So anybody who's thinking right now about the next 6 to 12 months, hey, I'm thinking about it, now's going to be the right time for me to buy. What do they need to be doing to get prepared?
I mean, the first thing you do is just get pre-approved. Look at where interest rates are today. Look at, we can run insurance payments based on, the area they're looking, give them an idea, but understand what your payment will be and understanding what your buying power will be, because sometimes people don't realize, going up an extra $50,000, it's not what you would think as far as a house payment.
Right. Yeah.
And I've always been told, this was when I was young, whatever, buy a little bit more than you think you can buy. I feel like a lot of people do try to stay conservative, which is great.
Yeah. I mean, there's
but chances are you're going to make more income, especially these first time home buyers or second time, but get a lender that understands the market. And get with a lender when you are ready and you do find that house. It's going to look at the market and look at interest rates where they are today, and maybe advise you to wait a couple weeks, because we're looking at trends on rates.
Right.
They don't spike up or down overnight. They kind of ease their way down or ease their way up. So not necessarily locking in right when you get a contract. It's listen to your mortgage company, what they're telling you.
Yeah. So. Yeah, I remember that was, when I did mortgages for you, and we're talking close to 20 years ago now. Right. But I remember you'd say, hey, let's just wait. Let's not lock in yet. And it's the client's decision ultimately, but we can kind of play with that a little bit, But I want to go back to something you said a minute ago, because it's not advice I hear very often, but I really, as you said it, and I was thinking about it, I thought that's really good advice. And that's buying a little bit more than you think you're comfortable with, like pushing it. So sometimes as an agent, I like to make sure I'm not pushing people, making them too uncomfortable. Hey, got to reach a little bit. I'm like, hey, just, maybe don't buy everything you're qualified for or whatever. However, I think the house I'm in today was a good bit out of my comfort zone when I bought it. I was like, I don't know, this is a little crazy, and that was 5 years ago. And looking back, I am like, that is the best decision ever. I mean, I'm so grateful that I actually did that. And I was pushed a little bit. I was pushed by a few people around me that I trusted that had said, no, you need to just do this. Don't worry about it. You're going to thank yourself later. And it is so true. Right. And so I think that's great advice.
Yeah. Look, on average, it's about $6 per thousand you go up. Yeah. So, and, another thing I think people make mistakes, especially when they're younger, middle age, whatever, is they want to put too much down on the house. Get rid of any other debt. Keep your mortgage. That's your only tax deduction. Right. Probably, unless you're self-employed or have other areas where you can deduct, but put less down. Yeah. Make it, unless you have more and you have the disposable income and you don't have any other debt. Yeah. But I always encourage them, look, stick to 3.5%, 5% down. Yeah. If you have other debt, if you don't, great. Put 20% down, avoid the mortgage insurance. So I think there's no generalization or general statement you can tell a borrower. It's like, that's where we come in to give advice on, hey, hang on your money, pay this off, do this. But I think people do need to stretch it a little bit.
Yeah. And it's funny, you're speaking my language. I'm a debt guy. So there's this Robert Kiyosaki versus Dave Ramsey, two schools of thought. And in an upcoming podcast, we're going to have a little bit of debate with me and my brother, because he's an all cash guy. And I'm like, borrow as much as you can, because of this concept called inflation induced debt destruction. So inflation is going to continue to happen, and you're borrowing yesterday's dollars and paying them off with tomorrow's dollars. That's a really good thing to have, because I'm glad I borrowed 5 years ago dollars, regardless of the rate. Right. The dollar's worth a lot less now, but I'm paying yesterday's dollars off with today's. Yeah. So the more you borrow, especially if you have other debt, like credit card debt, car car payment, your monthly cash flow is going to be way better off if you pay off that other debt.
That's right. Right. And a lot of people don't know. It's like, hang on to that money, pay off this car, and then they go, wow, well, I can buy more house. Mm-hmm. Yeah. So you have less debt load.
And by the way, a house is generally going to go up in value and a car is not. The car is going to go the other way. So if you can pay off a car to buy a house, that's going to help you build wealth long term, That's
right.
So what are some other interesting things that you've seen in the market cycles? Or let me ask the question a little differently. What's changed in lending, and positive and negative, over the last 30 years, or even the last 5 or 10?
So I think this is a really good thing. I thought about this earlier. If you look at pre-2009, it was kind of the Wild Wild West. Mm-hmm. Anybody could get approved, 100%. Investment, condos. I mean, you could pretty much do anything, but those bars weren't really qualified. We didn't have a real market. And that's really what happened when that 2008 was hitting and prices went way down and inventory went way up. So anyway, I mean, that's something to consider.
I mean, I think you're right, because that created a market of demand for buyers, which pushed housing prices up, but it wasn't a real market.
So, in today's world, we verify everything. So it's a solid loan, right? Yeah. We know it's going to perform. We can't avoid if someone death or gets injured or whatever and defaults on a mortgage.
Right.
Delinquencies are relatively low. I mean, if you start looking at that, I mean, that's why it's a very solid market. And we saw what happened in 2008.
Right.
I mean, delinquencies went up, foreclosures, all that.
Exactly.
So that's nothing you have to fear as a buyer anymore. You can go in with comfort and go, okay, this house is worth this. It's a solid market,
right?
Whatever it is.
Yeah, and all the foreclosures, like, people were so upside down right then and there. There was so many contributing factors that led to that, and none of those fundamentals we see going on right now. So I agree with you. I think, and I haven't heard that much of a fear lately about it. A few years ago there was a lot of fear, but I right now I haven't encountered that fear as much. But it's a good reminder.
No, it's a solid foundation now.
Yeah,
mortgages are in good shape.
So what else? What else would you like to tell our listeners that we haven't talked about yet today?
Well, I mean, just if you're looking for a house and you want to get pre-qualified and you want to know what you qualify for and go through payments, just give us a call. We're very good at just taking our time, especially with first-time home buyers. I mean, some people bought 4 or 5 houses. They don't need the attention, but sometimes these first-time home buyers don't know what to ask. So we're a good resource just to call and talk it through, even before you put in an application.
Yeah, and I can just testify to that for Richard, because, like I said, I've known him a long time, and he's very, very experienced. I'm a big fan of doing business with people who are experienced, because they're going to just naturally help you avoid pitfalls that you may not even know are coming. But I mean, you probably do without even thinking. You're like, no, we're going to go this way because there's so many, landmines down that road or whatever. So, well, thanks, Richard, for joining us today. I appreciate it.
It was great.
And I really appreciate you. Yeah, good to see you too.
Your success.
Yeah, well, thanks for both of us, man. It's a good table to be at, right?
That's right.
Yeah. So, well, thanks again for coming today, and thank you for joining us, folks, today on the Will Frederick Podcast, where we talk about real estate, wealth building, money, and life.